We have a lot to talk about regarding the new executive orders that Trump signed for both relief and stimulus. I also have updates from Mnuchin, Pelosi, and some very big problems that I researched going deep into all of these executive orders. So that's why we're going to go good, bad, and ugly through all of the bits and pieces. If you appreciate this whole summary, it took me like 7 hours to put together, please consider sharing this with somebody who might be interested or affected by this information. Let's get right into it. Also, the YouTube course and pre-sale does end tomorrow. Tomorrow is YouTube course release day. Make money from home. I'm sure by now you've heard of the 4 executive orders that were signed by Donald Trump. However, I'm going to condense everything now into this. Here we go. First, the payroll tax holiday executive order that was introduced and signed by Donald Trump. Here's quickly what it does, then the good, bad, and ugly. This defers the 7.65% employee portion of the payroll taxes on wages or compensation between September 1st to December 31st. The whole retroactive idea back to July, that's disappeared. If you make less than $4,000 for every 2 weeks, you'd be eligible. However, this is a deferral. Deferral means that you still owe it. Now, you will owe it without penalties, interest, or additions to the tax. The executive order then states 2 things. 1, the Treasury Department is to provide more guidance on this in the coming weeks. 2, the Treasury Department will explore options like legislation with Congress in order to get this deferral turned into a permanent waiver or forgiveness. So in other words, to actually make this real, Congress might still have to act. This has led some senators, like Senator Wyden, to call this a false tax cut. That is, it makes you feel like you're getting a tax cut, but you're really not. And there are 2 big problems with this. Number 1, if employers waive the employee's portion of their payroll taxes, and the employees take home an extra $76.50 per $1,000 they make, that's the quick SparkNotes math, all right? $76.50 per $1,000 you make is the extra money you take home. That money is still technically owed to the IRS until Congress forgives this. This means that if you make the maximum amount to be eligible of $104,000, you would save about $2,149 over the next 4 months. If you make half that, around $52,000 per year, you'd save about $1,050 over the next 4 months. That's cool. I mean, that is kind of like getting a little bit of an extra stimulus check, so it's not terrible for some. However, right now it's a deferral, and it's not waived. Then employers, because of this, might be worried that, all right, well, look, if I'm a boss, let's say, and I'm going to take money out of my employee's paycheck, then the employee is thinking, okay, cool, I'm taking home $76.50 more in my paycheck because I made $1,000, let's say. But what happens if that payroll tax doesn't get waived? That deferral does not get waived. Well, now the boss has to say, hey, employee, I know I let you take home $76.50 more. Now I'm going to have to take that out of your next paychecks on top of the extra payroll tax that you have to pay every single week. In other words, employers might have to take that money back in the future if that deferral doesn't actually get forgiven. This spells a disaster for 2 reasons. 1, employees are going to hate that because for now you'll take home a little bit more juice. It's like an adrenaline shot, but then you're going to feel the crappy side effects later if this doesn't get forgiven. But here's the even worse part. Because of this uncertainty, employers might just say, you know what, we're just not even going to do it until we know it's forgivable. In other words, even though you're technically eligible to take home this extra deferral, your boss might go, I ain't touching it until I know it's forgiven. In other words, you get nothing. So it hasn't done anything. So now let's just be fair here. The good is that if the money gets forgiven, it does provide around $1,000 in extra stimulus or relief money to individuals making around $50,000 per year, and it kind of scales up and down, right? Remember, $76.50 per $1,000 you make. And you have to be employed. You have to be a W-2 employee, and if you're self-employed, well, then you would just pay less when you file your taxes or you do your quarterlies. If you're retired or you're on disability, this doesn't benefit you at all. The bad, we're not sure that employees are going to even do this because of the uncertainty. And the ugly would be the money never gets forgiven because maybe, a different group of senators come in after the election and say, you know what, we're not interested in waiving these amounts. All right, so that's the payroll tax problem. Okay, now let's get on to the good, bad, and ugly on the unemployment executive order. Then we're going to do the good, bad, and ugly on the eviction and foreclosure crisis executive order. And so far, if you've liked this, you think it's simple and easy to follow, please do consider sharing it with somebody who could really benefit from knowing the insights of this. All right, the unemployment boost. On the surface, this looks good. $400 per week as a boost through the end of the year. That sounds good. Initially, we thought it was going to be $600, then Republicans said $200. Hey, this seems like a compromise. $400 per week through the end of the year, right? But as soon as we look under the hood, we have some major problems. A little bit of background, the program requires states contribute 25% of the $400 boost, and states are allowed to use CARES Act money, unused CARES Act money, for their portion. States are also eligible to offer more than $400, but the Fed will pay 75% of whatever it is. So if the states offer $500, then the Fed will kick in $375, and the state's responsible for $125. I mean, this sounds reasonable, right? Like, why would this be bad? Well, there are a few problems. I went through the actual text of this executive order, and I'm not going to read it to you. I'm going to give you the SparkNote version of this. The Homeland Security Disaster Relief Fund, the DRF, has about $70 billion in it. That's for things like hurricanes or disasters that happen, right? This executive order that Trump introduced for unemployment allows the government to raid about $44 to $45 billion from that program for unemployment pay, starting retroactively the week ending August 1st, which means it goes retroactively back to like July 25th, 26th, something around there. As long as we don't have a natural disaster, which ends up having to raid the fund first. So now, literally, this unemployment program, the Boost program, is competing with the Disaster Relief Fund. And the Disaster Relief Fund cannot be dropped below $25 billion left in it. But if we have a natural disaster or hurricane or some kind of crazy issue, now the funding in that pot is actually going to shrink and we'll have less money for the unemployment boost. But let's assume there's no natural disaster. If with about 31 million people claiming unemployment, times about $300 from the Fed, potentially a little bit more, just depends, but for simplicity, we'll go 31 million people times $300 from the Fed, and then we have 44 billion available for that, so 44 billion divided by 31 million times 300 gives us about 4.7 weeks of an unemployment boost, going retroactively to the week ending August 1st. That means we really get the last week of July and all of August. We're barely going to make it into September. Maybe we'll fall into September a little bit for this unemployment boost to actually last. So on the surface, it's like, oh, yay, $400 boost through the end of the year. Oh, but wait, we only have money to fund it barely into September. Congress is technically on recess until September 8th. So all we really did was kick the can down the road by about 30 days. But that's also when Congress goes back to work, the same time that they're going to have to negotiate a new budget for the government to avoid another budget or government shutdown because of budget negotiations. So literally, Congress is supposed to go back to work, deal with this new crisis of unemployment expiring again, and deal with a new government budget at the same time. This is a little bit of an issue, okay, to say the least. But the problem is this plan also has some new requirements that are going to disproportionately affect some people. To qualify for the new $400 boost, you must qualify for at least $100 per week of unemployment benefits via the PEUC, the PUA, extended benefits, short-term compensation, the TRA, or the SEA. This is different from the prior rules. The prior rules, and I've made spreadsheets and I've shared all of this with you on this channel and exactly how to calculate this. The prior rules were that in order to qualify for the $600 boost, you could literally qualify for $1 of state unemployment or the TRA or whatever, short-term compensation, and you would get the $600 boost in most states. Now, you have to qualify for at least $100. Here's how that cuts people out. If you make $500 per month, which is like making $125 per week, it's not making a lot of money. It's making $500 per month, not per week. Minimum wage, you're probably making somewhere around $350 to $400 per week. I'm talking $500 making boost, you could literally qualify for $1 of state unemployment or the TRA or whatever, short-term compensation, and you would get the $600 boost in most states. Now, you have to qualify for at least $100. Here's how that cuts people out. If you make $500 per month, which is like making $125 per week, it's not making a lot of money. It's making $500 per month, not per week. Minimum wage, you're probably making somewhere around $350 to $400 per week. I'm talking $500 per month, so somebody making very little money. If you made $500 per month prior to the pandemic, in California, you'd only qualify for $60 in unemployment pay. That means you would not be eligible for the $300 plus $100 boost. That means you don't get that $400 boost, even though you barely have an income to start with. This is sort of their way of cutting out the people who would make more money on unemployment, but it potentially really hurts people who have very low wages. That's very bad. The second thing is last time, if you had reduced or partial pay, you were eligible to get unemployment as long as you qualified for a few dollars of pay for the state via having partial unemployment. So like if your hours got cut, we did this all on spreadsheets. If your hours got cut a certain amount and you still qualified for some unemployment support to try to bring you back up to your original pay or a portion of your original pay, you'd qualify for the $600 boost. Well, now that partial payment is also going to get adjusted to you having to qualify for at least $100 to get the $400 boost. So you got two people who get hurt here. People receiving unemployment because they have partial pay, potentially, right, depending on that $100 limit, and people who make under certain thresholds to where they're not even getting $100 in support from the state. So if you barely qualified the last time, you might not qualify at all anymore. All right, so the good. The good is we got a boost for 4 to 5 weeks. That beats not having a boost, right? The bad is it's ending soon, and it comes to an end at a very nasty time for Congress when Congress gets back off recess and has to deal with, well, a new budget. The ugly, less people are now eligible, and a lot of people might be surprised that they're not eligible at all. And we've really only kicked this problem down the road for another month. All right, now, the eviction and foreclosure problem. I'm sorry, I don't want to come across as telling you what to do, but I really think this is the kind of information, like if you're going to share any of my videos, this is something to really consider. Because this gets funky. Listen to this. The executive order for the eviction and foreclosure crisis reads, "It is the policy of the United States to minimize evictions and foreclosures. The Departments of Health and Human Services and the CDC shall consider whether any measures temporarily halting residential evictions of tenants for failure to pay rent are reasonably necessary to prevent the further spread of COVID-19. Hold on. Wait. That might have sounded overwhelming, but wait. The last line said, to prevent the further spread of COVID-19. So this is only an eviction ban and foreclosure ban if the departments determine you getting evicted or you getting foreclosed on might spread COVID-19. And in such cases, the eviction protections might continue or foreclosure protections if the departments determine you getting evicted or you getting foreclosed on might spread COVID-19. And in such cases, the eviction protections might continue or foreclosure protections might continue. Heck, the HUD and Housing and Urban Development, is HUD, and the Secretary of the Treasury might even provide financial assistance to renters and homeowners who, as a result of financial hardships, are struggling to meet their monthly rental or mortgage obligations. You know, maybe they could do that through public housing or affordable housing to owners or landlords or federal grant money. You know, this is very different from the CARES Act. These are just some options in the executive order. But the big difference is the emphasis on if somebody might spread COVID-19. Let me read just that part again. I'm going to read the beginning part and the latter part. Consider halting residential evictions and foreclosures to prevent the further spread of COVID-19. Because if people get evicted or foreclosed on, they might have to be on the streets or they go move in with somebody else, and that might spread COVID-19. In other words, attorneys could make the argument that, we want to foreclose, we want to evict, And it won't spread COVID-19 because maybe this state doesn't have much COVID, or maybe this county doesn't have much COVID, or maybe this city doesn't have much COVID. So this literally only prevents evictions and foreclosures if you might otherwise spread COVID by getting evicted or foreclosed on. All right, the good. It provides hope and a chance at getting grant money and having an eviction postponed or foreclosure postponed. The bad. The National Low-Income Housing Coalition says this executive order offers merely false hope and risks increased confusion and chaos at a time when renters need assurance they will not be kicked out of their homes. The ugly, if attorneys can argue that people getting foreclosed on or evicted won't spread COVID, game over. The next one, student loans. The suspension and cessation of all payments of federal student loans or loans held by, quote, the Department of Education. That's their definition. If your loan's held by the Department of Education, you qualify. All payments will cease and all interest will be waived during during that time. I don't really see anything bad here. So far, this is just, okay, it's good. It's good for the people. The bad, in general, we've now passed 5 million cases of COVID, and we do not have new funding for testing, tracing, and treatment. In fact, let's go ahead and hit the flow chart right now. We haven't hit the flow chart in a little bit of time, so let's hit the flow chart because I've updated this and there's a lot to talk about on this. Okay, this is our flow chart. Let's quickly do an overview. SNAP program. Everything in yellow is stuff that's up in the air, which is pretty much everything, but not everything. I'll show you some of these changes. The SNAP program, that is more money for people under these income thresholds, is still up in the air. We don't know if the SNAP program is going to get more money. If your income falls below these income numbers, family of 4, $2,790, family of 1, $1,354, please call 211 or call 1-800-221-5689 and see if you qualify for SNAP funding. That is the new version of the federal food stamp program. Salt tax deduction, up in the air, not very popular. State and local government taxes, right? Then, state and local government funding. This is a huge, huge issue. Treasury Secretary Mnuchin sees this as a big issue. Nancy Pelosi sees this as a big issue. This is known as probably the biggest holdup in negotiations right now. Democrats want $950 billion. Republicans are willing to give $150 billion. This goes to things like police, fire, so on and so forth. Liability protections, still up in the air. We don't have any liability protections via these executive orders. Remember, Democrats are open to liability protections as long as workers and consumers are protected. So this just needs some clever wordsmithing, as they say. Funding for testing, tracing, treatment. We got nothing right now. Quick reminder, the HEROES Act would give us $1,200 stimulus checks and $1,200 for dependents. That's up in the air. We probably see no progress on the HEROES Act. And yes, and there is a lot of talk about this on the media, so I'm going to touch on it. Yes, people with ITIN numbers would qualify for those stimulus checks under the HEROES Act. That means if you are undocumented, aka illegal, but you have an ITIN, which means you're supposed to pay taxes, you would qualify for a stimulus check under the HEROES Act. There's obviously a lot of controversy regarding that. HEROES Act says $600 in unemployment, but here's something very new. Nancy Pelosi says, we're willing to negotiate and take $1 trillion off of the HEROES Act by shortening the time frames for things. So, for example, rather than extending the $600 boost through January 31st or potentially as long as March 31st, maybe they'll say, hey, let's for now just extend it until November or something like that. That's how they're saving money. That's how the Democrats are proposing to save money. Another big provision is Democrats say that they want tens of billions of dollars for aid to help feed hungry children. Republicans, per Pelosi, say Republicans only want to give $250,000. Mnuchin says, well, we actually came to an agreement on this. $150 billion for school aid. Both sides want this, but it's up in the air. The $1,200 stimulus check in some form. Both sides want this. Mnuchin this morning said both sides want this, but it's up in the air. Whether or not people with ITINs are going to be included, whether or not we're going to see garnishment for child support or whatever, all up in the air. We have no idea. The employee retention credit, up in the air. Work opportunity tax credit, up in the air. Gig workers getting aid from companies while still being 1099, up in the air. Paycheck Protection Program, round 2. If revenues are under 50% from the prior period from last year, or potentially they might negotiate that to 25% of a decline, up in the air. Nothing for that. Write-offs for self-employed or businesses for PPE expenses, equipment expenses, up in the air. Deductions for business meals, up in the air. New SBA working capital loans, up in the air. Mortgage forbearance, you could still take this. This is actually good. You could still take this. I highly, highly encourage. If you own a home, every single person who owns a home, you highly, highly are encouraged to go to metkevin.com/forbearance. It's just a redirect to a YouTube video, and it's going to walk you through exactly why you should take forbearance and how you barely have to have an issue to qualify for it. Like, it's everybody should take it, honestly. The FBI building, up in the air. The EIDL grant, fixing the problems with it, up in the air. Hero funding, essential worker pay, child tax credits, earned income tax credit, and what Trump recently alluded to, the capital gains exclusion or whatever. All this stuff up in the air. So we can see there's a ton of stuff, and there's a ton of work left to do. There's so much left to do. So now we look at this and go, okay, is all of this stuff good, bad, or is it ugly? Well, economically, I'm not sure that this provides terribly much stimulus. The payroll tax relief is a very small stimulus, if any, given the uncertainty we have right now. And the unemployment boost, yeah, it'll help many for the next 4 to 5 weeks, so that's very good for now. But, you know, maybe is this better than nothing? Maybe. Is this going to hurt negotiations and further prevent a real bill? Possibly. And this is exactly why you need to get 2 free stocks with Webull and Life.